Hi there, this is Dan Denning from the Daily Reckoning Australia, and we're doing something unusual today. As you might know, especially if you're a Daily Reckoning reader in the United States, there's a whole team of analysts and editors that are traveling in China right now. And I sent them an email earlier today, and we've just managed to hook up with Chris Mayer, the editor of Mayer's Special Situations Report, Addison Wiggin, the executive editor of the Daily Reckoning, who's behind the scenes on this one, I think. So we're just going to talk to Chris today. But Chris, we won't keep too much of your time because I know you're busy. But why don't you tell people what you're doing in China, who you're with, and what your itinerary is while you're there?
Sure, Dan. We're here really for two reasons. One, we want to find out why China matters, and number two, we hope to answer the big question, which is China a bubble? And we have a very busy itinerary all week. We've got a slate lined up with private equity managers, fund managers, economists, people who work on the ground here, and should be able to give us some good insights into what's going on. So in addition to that, we've got some interesting sidelights as well. But the main idea is to get at those investment questions.
Right. Well, I guess to cover a little local territory here, as you know, you were in Australia late last year, and it was earlier this year actually, and you had a chance to see how much the resource economy here is linked to what's going on in China. And we were discussing earlier that we've just published a report here where I've talked about the high level of fixed asset investment in China, the huge stockpiling of commodities, and whether or not that's actually a bubble. So we relied a lot on institutional research and our understanding of bubbles from Austrian economics. And so from here, that's what it looks like. But you're there now. You're in Beijing. You're going to Shanghai. So you're in a position to maybe have a more informed opinion on it. So what do you think right now? What does it look like to you? Is there a real estate bubble in China, and is it deflating right now?
Yeah, I think the two big macro overlays that we continue to hear and see and people talk about are, number one, the surge in bank lending since the end of 2008. I think it's gone up something like fourfold. And we know from experience and we know from theory that when bank lending expands that quickly, we're really planting the seeds of a future banking crisis. We're basically creating a lot of loans. Bankers can't put that money to work, moving significantly down the credit quality scale, and I know that as a former banker.
Right.
And number two, there is the huge stimulus package that China implemented last year, which was even bigger than the U.S. stimulus package in relation to the Chinese economy, and that's driven an enormous amount of activity here. And we also know from experience that government-led investment like that is not always the most economic use of that capital. And so you get the bridges to nowhere sort of thing. And so we don't know if we see, just walking around Beijing, there are an awful lot of cranes here. There's an awful lot of activity. But the key question is how much of that is really demand-driven, natural economic growth, and how much of that is just artificial stimulus. And if it is artificial, then the natural question is when that runs out, what happens? And the effect of it, we see, you mentioned the property market bubble, and that's a big question. We've talked to everyone we've met, we've asked them that question. And we've gotten lots of polarizing viewpoints on all kinds of topics, everything from whether the renminbi is undervalued or not. But it seems that most people, so far that we've talked to, seem to acknowledge that there's some funny things going on in the property market. For example, we have heard stories of people buying brand new apartment buildings and just sitting on them. They're almost looking at it as a store of wealth. There's not even an attempt to lease it out. In fact, that if you try to rent it out, it's almost like it lowers the value of the property. They want to keep it brand new and unoccupied. And then it leads to some weird speculations, too. We've heard, for example, that when a brand new cemetery opens up in Beijing, that there's a rush of Chinese buyers to buy the plots of land, even if they have no need for it. There's an idea that land in Beijing is going to go up, and it's a store of value. Right. So those kinds of things point to, I think, a pretty dangerous situation.
Okay, well, that's fascinating. So there could be a bull market in death, but later.
Yes, later.
Well, I haven't been there in a long time myself. It's been, I think, almost 5 years or 6 years since I was there, and a lot of what people were saying at the time, which I found to be true even then, was that despite misgivings you might have about who's allocating the capital and whether the projects are going to return anything to Western shareholders or to shareholders, or a lot of the real important questions about the structure of the capital markets in China, there's just a tremendous amount of energy there that's somewhat infectious. You can't help but be affected by it and feel like it's an industrious place. But with respect to the capital markets specifically, that when I was there was a real weakness. The Shanghai Gold Exchange was just opening up, and I think most North American investors were still participating in China through Hong Kong listed shares, and there weren't even that many shares listed in the States that had China stories. So what's the story with the capital markets now as an investment opportunity for people in the States?
Okay, well, that's an interesting question, and that's one of the odd things we've found on this trip is the Chinese stock markets themselves, the Hong Kong shares and the other shares, well, Americans can't buy them. I guess Australians can, I'm not sure. But that market is pretty much bubbly, and everyone we talk to, these professional investors don't touch that market. It's a retail-driven thing. It's surges of liquidity in and out really drive it. But what we have found is there is some interesting opportunities in U.S.-listed securities of Chinese companies. There are now over 400 of these companies. So these are companies that list on the New York Stock Exchange or the NASDAQ, so they file regular disclosures. And you can find many of these companies trading for single-digit multiples of earnings, and they have good balance sheets, sometimes more cash than debt. And when you net out the cash, they're trading for 3 or 4 times earnings. And the people we've met with, the private equity guys and some of the fund managers, say that now there's some good opportunities to buy, and that's only been very recent. As recently as January, we talked to one fund manager who was heavily short these same securities. But most of them are well off their highs, and like I said, again, they're trading for single-digit price earnings multiples and growing 20 or 30% a year. So we think there's some opportunity there for long-term investors.